What's up, everyone? It's Caddy with Money Vesting. I just want to make sure that the audio and the video is working well. And yes, so we are starting a little bit earlier today because the markets are definitely very, very red. And obviously, I wanted to spend some time with you guys. I have been sick over the last couple days as usual. The air and the water here in India is not super good. So got a little bit of a low-grade fever again, lots of headaches, just a lot of weakness. So hopefully I get better. But the markets obviously are not doing their part for making me feel better. We've got the Dow Jones down about 0.5%. We've got the SPY ETF down over 83 basis points. And the NASDAQ down about 1.34%. So overall, just lots of selling pressure coming in. By the way, how's the audio? I am really excited about this new microphone. And again, got it for all of you guys. I know the audio has not been picked perfect, but hopefully this is now very, very crisp. It should be clear. And let me know in the comments how is that. So please change it to a green one. So it actually does not change into a green one. I specifically got a red microphone because when it's red, it's also opportunity, right? There's also opportunity when it's red. So perfect. Victor says crisp and clear. Audio is great. Great audio. Audio is much better. Awesome. That was the whole point, and that's great to hear. So I wanted to start a little bit earlier because I wanted to spend some time with you guys going over some individual companies, going over some intrinsic value calculators, looking at some fair values, because as the markets are selling off, I think it's appropriate for us to create a wish list, create a watch list for us where we can dollar cost average and buy more shares of those companies. Again, if you are trading for the next couple of quarters, then yes, you want to be positioned well, more towards those recession-proof stocks. You want to be more positioned in the value and some of the Dow Jones names. But if you have a longer-term outlook, say 3 to 5 years out, then these opportunities where technology names and discretionary names and communication services, they all sell off, that's going to be an opportunity for us to buy more shares of those companies instead of just not touching them at all. So we'll be going over some intrinsic value calculator here, but before we do that, let's just go over some individual stocks. So NIO obviously suspended its production due to the pandemic-related supply chain disruptions. So we do have the cases kind of going back up in China. And unfortunately, NIO was down over 8% pre-market. So pretty brutal sell-off here for NIO. So we are down over 10% right now for NIO. Pretty brutal, trading as low as $18 at the moment. So down about 10.1%. Alibaba here is also down close to 2%. Let's take a look at Li Auto, down over 6%, and Xpeng Xpeng is down over 8%. So a lot of Chinese EV makers getting hit left and right, unfortunately, because of cases once again going higher. So Twitter, yeah, I know, so much for that head and shoulders, man. I mean, seriously, we talked about NIO and we had a little bit of a breakout. We were moving in the right direction, and then the entire market turned, and of course, we're now getting that catalyst that's obviously going to drive prices even lower. So bit of a fail to break out for NIO from that inverse head and shoulders. We were seeing that continuation, but then the last 3 to 4 days have been absolutely brutal for the company. Twitter also fell 1.5%. Elon Musk said that he will not be joining Twitter's board, and Musk revealed a 9.2% passive stake last week. And I think it's for the best. I do think that he's got bigger plans with Twitter, but joining the board, being an investor, and also being probably one of the most followed person on Twitter, there's going to be a lot of conflict of interest for Elon Musk, and I think he's better off just being a passive investor in the company, not really driving the decisions moving forward. He's definitely going to have some inputs, in Parag, who's the CEO, he's definitely going to take Elon's word into account when he's making any changes or where the company's looking to go moving forward. But I think it's for the best. I think he's going to be less scrutinized if he's not on the board of Twitter. Shopify, so they basically proposed a 10-for-1 stock split. So big news coming in for Shopify. I do think that Shopify would have been better off if they did like a 10-for-1 stock split earlier when the stock was at 1800, because they would have been able to take advantage of a much higher share price for that stock split. But right now, 10-for-1 stock split is gonna put us at roughly $60, which is actually low for a company like Shopify. You'd expect Shopify to be at least trading at over $100 even after a split. So, but 10-for-1, that's what they're doing. Slightly up, the stock price up over 1.5% on this catalyst. Really doesn't really do anything to the fundamentals. And the creation of new founder share and the voting power to 40% from current 34% for the company. Moving forward, we got Nvidia. So Nvidia also got a downgrade today, unfortunately. So the stock slid 3% pre-market after Bard downgraded the stock on potential cancellation on chips and weakening demand when it comes to semiconductors. So Nvidia, last time I checked, it was at 225. Right now we're at 222. So down a little bit over 3.75%. So got rejected at 286, 285, and it's been selling off close to 22, 23%. From our all-time highs, we're down close to 40% right now, 35, 36% for Nvidia. So pretty decent sell-off here for the company. And again, sub 200, sub 195. I'm definitely very interested in Nvidia. Will probably be a very, very small position for me, at least to start us off. And the lower it gets, I think the better the valuation will become for the company in the future. So let's see. Shopify plans for a 10-for-1 stock split, which we covered earlier. Bard downgrades Nvidia, warning for chip order cancellations. So we believe order cancellations recently started in consumer graphic processing units, driven by excess inventories and a slowdown in consumer demand, reflected by an ongoing reduction in graphic cards pricing, a slowdown in PC demand, and the Russia embargo. And concerns about slowdown in personal computing demand have weighed on tech stocks in recent week, and shares of Nvidia are down 15% in April, while the semiconductor index has dropped about 9%. Year to date, Nvidia shares are down more than 21%. So the outlook on semiconductor and chip stocks have really, really shifted. I mean, AMD also had a couple of downgrades, and now we are trading at under $100. So AMD right now is trading at $99.10. The last time we actually saw these levels was back in July of last year. So very strong momentum here coming in from AMD. Of course, it's down over 40% from its all-time high, so close to 40%. And again, sub 90, sub $95. I would love to kind of dollar cost average for advanced micro devices. We've waited long enough to buy AMD at these levels. So again, Elon Musk said, decides not to join Twitter's board, and that pretty much wraps up our complete upgrades and downgrades, and of course going over different catalysts here on the day. I'm gonna start the poll. So red one was on clearance. Yes, yes, the red one was definitely on clearance. But let me know what you guys think of the markets today. So markets today, green. We're gonna do red, and we'll do flat. All right, so make sure that you vote, and I want to hear from everyone to see where we are with the polls and what the market expectation is from everyone today. Volatility is definitely higher, so we're up a little bit over 8% for the VIX. So it's back over 22, close to 23 levels. Obviously we were trading at over 18, 19 levels just a few days ago, and since then we have jumped 25% for the volatility. Kat, did you ever put money into squeeze stocks like ATER? Not really. I mean, I don't really specifically base my thesis of a potential short squeeze. So the answer would be no. But I've owned companies that have had a potential short squeeze in the past. Like Corsair Gaming was another catalyst for that short squeeze. So if you come back, and of course we had Wall Street Bets also part of that, with a big jump here on this day, where Corsair Gaming went over 38%, trading all the way up to $42, $43. Obviously, it didn't quite stay at these levels forever, and it has sold off since then. But not really that I'm going after stocks that have been shorted heavily. So this right here is going to be the VanEck Semiconductor ETF. Looking at this ETF, we've had a couple of head and shoulders that haven't really worked out. So you'll notice kind of like a left shoulder here, a big head, and then a potential right shoulder neckline right here. So we did see some buyers step in, and right now we're coming down to that support once again for this particular ETF. So the support level that I will be watching below this is going to be 224 if the selling pressure continues, which is very much possible, given how much the sentiment has shifted more towards negative on Nvidia, on AMD, on Intel, on some of the semiconductor names. So would not be surprised one bit if you do see a retest of 224 on this particular semiconductor ETF moving forward. And of course, some of the leveraged ones, SOXL, right now it's selling off down about 4%. So again, it's been validating the support for quite some time, roughly in the $27, $20 range. But if it does sell off, then the next support really is going to be this level at close to $22 for SOXL. All right, so let's see, Red Till Friday. So are you hedging your portfolio for the month of April and May? So really what we're doing, or what we have been doing, is just selling covered calls on stocks. So, we have a couple of covered calls on PayPal, on InMode that are up 75-80% as they continue to sell off. So in my opinion, that's one of the best strategies if you are looking to hedge your portfolio. Obviously, you can go long on some of the short ETNs, like SQQQ is a great way to basically play the inverse side. You can go long this. It's up over 3.79%. From the recent drop, we are up over 23%. But the only issue is that, the timing of this is very, very difficult when it comes to the inverse ETF, right? You can also go long VIX, right? So there's UVXY, there's VXX that you can take advantage of. But I personally, if you've got a portfolio of stocks that you own 100 shares of, you can certainly sell covered calls. And that's a great way to make money when those prices are coming down, right? And that also lowers your cost basis. So that's like a win-win situation for me personally, because I do want to own those companies long-term anyway. And the prices that I choose, the strike prices, I'm comfortable getting rid of those shares at those strike prices. And I've also been doing that for Marathon. I've been doing that for LABU. I've been doing that for several different names. So again, that shirt is in line with the hair. That's great. I recently got a haircut, by the way. So thanks for the response. But yeah, if you have any questions, just let me know. What I want to do today really is just go over this intrinsic value calculator and kind of share some fair values for different stocks, right? So different companies. I want to go over, what is going to be the appropriate price point? Where can we actually start buying that if the market continues to sell off, if stocks continue to sell off? So I think that would be very helpful. If there's any stocks that you're looking at, like for example, if you can start with AMD, and that would go over, specific fair value. What's the fair value based on today's earnings and based on the projections for the next 5 years? So that's kind of like what I want to do. And we still have a lot of time. We got about 40 minutes till market opens. So we can just go over to Seeking Alpha, and check out different stocks and their earnings, and then calculate the fair value. By the way, InMode, positive pre-market, maybe bottom reached, good candidate for fair value estimation today. I agree. I think InMode, I did that earlier in that previous video. The company is trading at a very, very low valuation. I mean, it's trading at 16.5 times forward earnings. And just that one screenshot that I shared for InMode is absolutely amazing, because you've got consistent revenue growth for the last 5 years. The company's been growing revenues very nicely, but you've also got a very high margin business, which is A, profitable, B, the balance sheet is phenomenal. I mean, the company's got literally no debt, with plenty of cash, and it's trading at a very, very cheap valuation. So InMode definitely kind of fits that criteria. And InMode right now seems to me like the early stages of what Vertex was, right? So when Vertex was selling off, when this stock was down all the way to 180s, 170s, from all-time highs of $305, it was down 42%. I do personally believe that InMode is where Vertex was just a few months ago. And why that is because Vertex, very similar to InMode, also was a very nice growing company, but it was trading at a very low valuation. So if they're able to hit those numbers at 20, 25, 30% growth year over year, I do believe that InMode has the potential to go higher over the next 3 to 5 years. Again, it's not going to be like a 1 quarter play or like a 1 year play. InMode is again going to be a longer term investment. So when you come over to diluted EPS, we're looking at $1.92. So $1.92, that's going to be the earnings per share. You plug that in over here, and then you look at the actual growth for the company, right? EPS 3 to 5 years, that's not given, so we don't have that. But we look at EPS diluted forward at 35%, right? 35% is the expected growth in the earnings per share for the next 12 months. But I'm not going to take that because that is really, really high. And if you guys know me, that I like to be very, very conservative with my estimates. Even if we go with like a 15% growth rate and we give it a 20 times multiple, we get a fair value of just under $40, right? So again, this is just my estimates, my analysis. Everybody's got different opinions and different growth projections, different multiples that it should be trading at. But I think this is very fair. They can grow earnings by 15% over the next 5 years, PE multiple of 20, and that's going to put us at roughly $40 fair value. And right now it's trading at 34. So in my opinion, InMode is a strong candidate of being undervalued. All right, so are you adding LABU since it's down? So yes, LABU. I do have a couple of cash secured puts with the average cost is going to end up somewhere sub $15 if they do get assigned, which they do expire in May. But my plans are to, yes, do $2 cost average into Biotech. XBI is fighting that resistance at $96, $97. So this right here is going to be a very strong resistance that we're struggling to actually break out of. And we're not able to successfully close above that level. So, you know, for a lot of indices, you'll notice that we are seeing some type of an inverse head and shoulders. Like for example, the NASDAQ definitely has a very strong inverse head and shoulders right now. So this right here is going to be the overall neckline. This right here is going to be that left shoulder, a head, and a potential right shoulder that we're forming now as the market comes down, and then we possibly revert back to the upside and then possibly see a breakout past this sort of neckline moving forward. But we'll see if that actually does play out. And I think XBI is kind of like in a very similar boat where the neckline is going to be at $96, $97. You know, we got a possible left shoulder here, a head, and then a possible right shoulder forming with a potential breakout coming in for Biotech. But Biotech, I do strongly believe, has a lot of potential, as I've already mentioned before. So Debt League, how do you get good premiums on covered calls when it keeps going down? So usually you get a lot of good premiums on covered calls when the market sentiment is bullish. So you're absolutely right. Right now with the sentiment being so bearish, and even in our poll, you'll notice that 76% of investors expect markets to be red, right? So there's definitely a lot of bearish sentiment here in the market. It is difficult to obviously get those premiums, but you can still get some decent premiums, you know, depending on your cost basis and depending on your strikes. So if you were to do some very simple look at some of the companies, you know, right now is obviously there's also opportunity to sell cash secured puts. So if you're looking to hedge, covered calls is a great way to do that. But if you're looking to buy shares at cheaper levels and get paid to wait, cash secured puts are also a great way to do that. And look at AMD, $95 strike, $410, right? That's also very, very nice premiums. $90 strike, $254. That's a good 3% return in just 1 month because we're looking at May 6th. I think InMode has some decent. InMode doesn't have that high premium. So May 20th, we're looking at about 50 cents, $1.40. Upstart definitely has very high premiums. So $75, you're getting $4.95. $70 strike, you're getting $3.30. So again, cash secured puts definitely premiums go up when the market sentiment is really bearish. So BML Empire, should I be selling covered calls around my average cost in this market? So it really depends on the stock, right? So for example, if I personally have AMD, right, and if I have, let's say, for example, 500 shares of AMD, and I'm comfortable getting rid of 200 shares, right? So I would be fine selling 2 covered calls of AMD just a little bit over my cost basis, just a little bit over my average price. Because remember, when you're selling a covered call, you have the obligation to deliver your shares to the buyer, right? You have to sell your shares at that strike price. There's no way around it, right? If the stock price goes, way in the money, then you have to sell your shares at that price. So you should be comfortable selling your shares at that strike price. If you're not, then I would go with a further strike price, which is much higher. Chances of that option expiring out of the money are much higher. Or just sell it for some other stock that you're comfortable getting rid of. But if you are looking to kind of do it at around your average cost, it always needs to be higher than your average cost. Otherwise, you're not making any money, right? So make sure that it is higher than your average cost and you're comfortable kind of getting rid of those shares. All right, let's take a look at Etsy. Etsy, I've definitely been considering. So I hope your mic had 3-color flip, green, yellow, and red. What it can do is actually it can turn off the red. So at that point, it will be muted. So if I tap the top, you guys won't be able to hear me. So I don't know. Were you guys able to hear me at that point? Probably not, because it was muted. So it's only glowing red versus not glowing red, right? So just a regular red mic. But again, if you're part of this community, we do cherish red days. We like red days because it gives us the opportunity to buy, gives us the opportunity to dollar cost average. We're never going to shy away from a nice red day because, like I said, gives us the opportunity to really dollar cost average on some of the stocks that we want to be long-term bullish on. What kind of sorcery is this mic? It's pretty cool, actually. I got a nice, microphone arm. Feeling a lot more professional now, definitely. So, but anyway, so Etsy, we were starting to see a little bit of a breakdown here below this symmetrical triangle. So let's just quickly go over Etsy as well. Let's just calculate what the fair value is going to be based on the growth rate. And I want to hear more engagement. I want to have you guys participate because that's what we're going to do. We're going to look at the earnings. So diluted EPS was $3.40, right? So 340 was the diluted EPS. We're going to plug that in for Etsy. And I want to hear from you guys. What type of growth do you see for Etsy over the next 5 years? Based on Seeking Alpha, based on the analyst estimates, the next 3 to 5 year EPS growth is going to be 28%. But what do you guys think? What is going to be an appropriate conservative growth rate for Etsy over the next 5 years? It's going to be 28%. Are you in line with what Wall Street thinks? Do you think like 15%, 20%, 35%? What do you guys think? I want to hear from you guys. I, again, take this number and, I'm a little bit more conservative. So I, maybe subtract 10 from this and go with like an 18%, 16%. Because remember, if you're conservative and you can get your prices, if you can buy and be conservative and the company hits those targets and even exceeds those expectations, that's like the cherry on top. Then your returns really are going to be much more than what you anticipated. But if you are super aggressive and the company doesn't hit those, then it's going to be a big disappointment, right? So I'm better off just being conservative. And if they end up beating those, great. But I don't want to be aggressive and wrong. I'd rather be conservative and right. So I'm in the 25% range year-over-year growth for Etsy. No growth because everyone is looking for someone else. Etsy just raised the fees. Half of sellers are looking elsewhere to sell. That's interesting. Etsy will be hurt by inflation. So what is the general idea between, right now in terms of growth? I'm thinking 18%. I think that would be very reasonable for growth because revenue growth is expected to be 24%, 25%. The reason why EPS is expected to grow at a little bit of a higher pace is because of economies of scale and the company, becoming more profitable, more efficient over time. And that operating leverage is also going to kick in. So I would go with 18%. I think that's a very reasonable number. And then what is the multiple, right? What type of multiple can be assigned to Etsy? So valuation right now, it's trading at 27. Definitely, it is a little bit of an e-commerce / technology play. So 27 times PE multiple on a forward basis, what's trading at. We can barely see you anymore. Okay, so let me just make it a little bit lower. How's that? Better? I'm just gonna see myself here. There we go. Yeah, this should be much better. Yeah, this should be much better. So I'm gonna do 25 PE multiple, and we get about a $99 fair value for Etsy. And where is it trading right now? 113. So it's definitely coming down to more of a level that's gonna be consistent with our analysis, right? So very, very reasonable. I mean, take a look at this revenue and earnings growth, right? Very, very strong. Revenue went from 441 million to over $2.3 billion. That is a very strong growth rate. And earnings, you'll notice that have also gone up 21% margins. That's also very good. Let's take a look at the shares outstanding. It's gone from about 112 million to 127. So there's not a lot of dilution for the company over the last 6-7 years. Return on invested capital at 20%. That is very good. Gross margins at 70%. That's very good also. Return on assets at 15%. That's what we look for. We look for mid-teens, high teens. And then we got current ratio at 2. Let's take a look at their balance sheet. So let's see, cash versus debt. So that's a little bit of an issue. So definitely the debt is over 2.4 billion. Cash is sitting at just under 1 billion. So definitely the company doesn't have enough cash to pay down their entire debt. But 99 or close to about $100 is where I would be looking at for Etsy. I've actually owned Etsy before, and we trimmed that entire position in the 280s, in the high 200s, low 300s, because again, the valuation was too high. And since then it has sold off over 63%. So now it's getting to a level where I'm interested once again, but at closer to 99 and $100. So that's going to be the fair value for Etsy. So UBS raises inflation expectations to 5.7% by end of year from 4.5. So I actually shared, so let's just do Upstart very quickly, and then we'll go over. So I just want to make sure the audio is still good. You know, the last thing I want to do is obviously the audio not working well. So somebody says there's a little bit of a reverb. So just let me know if the audio is still working well, because that's the most important thing. I'm sure you guys don't want to see this pretty face, but I'm fine with the microphone in front of me as long as, you know, the audio should be better. Okay, good. So thoughts on AMD at this level, Caddy? I am a buyer, sub $90. So definitely, I think it's just been selling off too much. I don't think it deserves like a 40-45%. Well, you know, valuation did get high. It was definitely higher, so it does deserve like a compression here, multiple compression. But at the same time, I think we've also seen a lot of downgrades for absolutely no reason whatsoever. So, all right. So this right here. All right. You know what? Let me just take a screenshot. So this is UBS's inflation expectations for this year, right? So I covered this in my previous video. They do expect inflation to kind of get tapped out at 8.5% next week. Those are the numbers that we're going to get, and then a consistent, steady decline for inflation moving forward, right? So April, July, October, inflation numbers to come down dramatically. So, you know, that should be very interesting. That's exactly why I'm a little bit more bullish on the market. Short term, there's going to be a lot of confusion. So I want to be very, very clear that short term, there's going to be a lot of confusion. There's still going to be some red, and there could still be more pain for the markets. But if you look at it after 2022, like over the longer term, as inflation stabilizes and comes down, and if for any reason interest rates remain high and we go into some type of a recession, then what is the Fed going to do if we are in a recession and inflation is low? Can anybody guess? What is the Fed going to do when there is a recession and inflation is already low? What do you think the Fed will do then? So I'm just waiting for you guys to answer, but rates down in QE, correct. So that's what they're going to do. They're going to start cutting rates again, right? So they're going to lower rates. And that is going to be, I don't think they're going to start buying again as they did last time. But they are going to cut rates, because once you've got a GDP that's slowing down, once you've got unemployment that's potentially going up in a recessionary environment, you don't need to keep interest rates up when inflation is already down, right? So if this thing comes down and we enter into a recession with all these rate hikes, now the market's pricing in 6 or 7 rate hikes, then that's going to be a very bullish environment. During that recessionary time, yes, the market's going to struggle. Yes, a lot of stocks are going to come down, but I will be an aggressive buyer during that time, because, like I said, the Fed will have no option but to cut rates again. That's going to be a little bit more of a quantitative easing environment overall. So ask China for a loan. So this month should be the highest CPI reading. Yes, that is the expectation from the markets, from the economy. So this week's CPI reading that comes out tomorrow, again, the live stream will be a little bit earlier. It comes out at 8:30 a.m. Eastern, so we will do that. We'll start at around 8:15 a.m. Eastern. We'll go over what the numbers are, where most of that inflation is coming in. I think energy is still going to be the leading line item that's seeing a lot of the price hikes. But yes, the expectation is for this week to tell us the peak of inflation at over 8.5%. All right, so Ray Dalio has a great 30-minute video, how the economic machine works. Yes, so true. That is actually a great video. That is a very, very nice video. I watched it. It's an animated video. And I think there's also like a new video, like a world reset, that is also very, very nice animation, and great work by Ray Dalio. Ren says, hide the mic. I'm just going to lower it a little bit. But anyway, so let's take a quick check on the markets here. Now we got about 20 minutes left for the markets to open. The Nasdaq is still down about 1.28%. We got the SPY down about 75 basis points, and the Dow Jones down about 0.5%. The relative performance chart that Ranjit mentioned, we are coming right back down. So last week was very, very brutal, especially for the Nasdaq names. It was down over 2.36%. So giving up on pretty much the last 2 weeks worth of gains, and right now pre-market we're down about 0.5%. So we're coming down once again with that Nasdaq's underperformance relative to the Dow, relative to the S&P 500. The yields, so we've got the spread between the 10 and the 2 up over 11%, back over 20 basis points. The 30 and the 5 is still down -1 basis point, and the 10 and the 5 is -4 basis points, with the yields up to as high as 2.75%. So they have just been consistently pushing higher. And from Deutsche Bank, we also looked at that the expectation for the 10-year yields is to go up to as high as 3%, 3.3, 3.5% for the 10-year yields. So that is, again, going to be very, very interesting if that continues. And again, we covered the volatility. So VIX is up over 8% right now. Oil prices coming right back down. So, we got crude down over 3.3%. This right here is going to be that support at $93, $94. A very, very important level to watch. And then we got Brent now also trading under $100 a barrel. And in that other sort of screenshot that I shared with everyone, you can see that the surplus really is going to start after I believe the third quarter or fourth quarter of this year. So after that, we're going to see a surplus of 400,000 barrels per day. But till then, we have a deficit for oil. So right now we're going to be $96. That's going to be the level to watch at the moment. And then Bitcoin doing Bitcoin things, down over 2.5%, breaking down below 43,000, so selling off even further. So we'll go ahead and turn this level back into a resistance and support all the way over 38,000. All right, so let's just go over some more individual companies. Like we calculated for Etsy, the fair value is going to be just under $100. For InMode, we calculated fair value is just under $40. If there's any other stocks you want me to go over, remember they have to be profitable for us to really calculate the fair value for them, for the intrinsic value. And if it makes sense to either buy them or add them to the watch list. Timothy, you don't sound too excited today. That's because I've been sick. So the last couple of days I have been sick. I mentioned it in the beginning of the live stream. Yeah, I've just have been dealing with severe headaches, once again, low-grade fevers, and then, just been on bed rest for a long time. So just recovering from all of that. It's been terrible. Just been hydrating also because I've had a lot of dehydration. All right, so let's take a look at Best Buy. I haven't really looked at Best Buy from that intrinsic value calculator, but BBY, let's take a look. So financials. So BBY diluted EPS was $9.84, and this is again for the most recent fiscal year, January 2022. So we're gonna go with $9.84. We're gonna plug that in over here. Now for BBY, I think the growth estimate needs to be even more conservative. So if you look at the next 3 to 5 years growth, it's going to be 8%, right? That's what Seeking Alpha has. EPS growth forward next 12 months is under 10%. So no, I don't think it's COVID. Yes, Ed, I am sick a lot because I don't know. It's the change of weather, it's the allergies, it's the water, the air, the pollution. If I showed you guys the weather app where I'm at, it is all red. It is literally all red because the pollution here the air quality is pretty bad, unfortunately. So, but yeah, I couldn't agree with you more. Definitely, I do get sick a lot. So 8% is the growth for EPS for the next 3 to 5 years. 9.9% is going to be for the next 12 months. Again, I'm going to be a little bit more conservative. I'm going to go with 6%. I would say. I think 6% is way too conservative. So that's that. And then we're going to have to pick a multiple. Now, Best Buy, I don't think it's a super high margin business that's also not growing at a very, very high level. So, if you come over to percentage of revenue, you got gross profit margins at 22%, right? 22% is the actual gross margin for the business. The net margin is going to be 3.8%, 4.7%. So it's a very low margin business, right? So you got low single digits in margins and mid single digits of growth. That makes sense for the valuation. Could you hold on one second? All right. So you've got a price to earnings on a gap adjusted basis forward at 10.4. Trailing basis at 9.4. So I'm going to go with 10, right? I think 10 is a very reasonable number. When you plug that in, you get a fair value of $67, right? $67 for the company. Again, remember the discount rate that we're picking is going to be 12%. That's the discount rate that we're choosing. And BBY is currently trading at $93. So we still have a little bit of downside left for this company, right? $80 is going to be that support for Best Buy. All the way down to a fair value of $67. So if that's something that you want to put on your watch list, on your wish list, and create an alert at $67 fair value based on these estimates, very, very simple conservative estimates, then I think it's reasonable. One more thing that I want to mention, by the way, Mohit, thank you so much. Richard says I'm knocking on your door. Please let me in. Mohit, thank you so much for that donation. I really appreciate that. One more thing that I wanted to mention is that we're taking a margin of safety of 10%. Right? So that's factoring in a variance in our projections. If I do 0%, you'll notice a fair value jumps to $74. $74 is going to be obviously much higher than 67, but since we want to be more conservative and apply a margin of safety of 10%, we get a $67 fair value for this stock. So still a little bit more room to the downside with a price target of close to 131 for the company over the next 5 years. And 131 is going to be about a 44% upside for Best Buy if they're able to grow their earnings by 6% and the market gives them a 10 times multiple. All right, so we got about 14 minutes left. I'm going to do a couple more stocks for you guys to go over the actual intrinsic value. So far we did InMode, we did Best Buy, we did another stock that we did, Etsy. But there's more that we're gonna do like over time. This is something that we also do with our private live streams, private community. But yeah, there's a few more that I can do, and let's just go over to Costco. I think Costco is a good one. Costco, I'm definitely interested in buying, but I still can't wrap my head around the price to earnings multiple and how it is trading at such a high level, right? I mean, the revenue growth has been very strong, 129 billion to over 195. That is a very, very strong growth for the company. And then we got, I'm not able to click on that. But anyway, so diluted EPS has gone from about $6 to over 11.27, so it's almost 2x. So it's pretty much almost doubled over the last 5 years. So year-over-year growth, we got 9%, we got 7.8%, then we got 9.21%, 17%, very strong growth. I mean, this is obviously coming in as the demand for some of their discretionary items has gone up. So Costco has done really well selling in bulk. But $11 is going to be that number that we're going to take, 11.27, right? So 11.27, and we're going to take a growth for the company, which is obviously not going to be very aggressive, but let's see. So we got $10 right here. So EPS growth next 3 to 5 years, 10.8%. Forward growth 17%, right, for the next 12 months. So I'm going to go with 10%. I think that's a very reasonable number there. 10% growth, and then multiple. That I think we're going to have a debate on. What do you think is the fair multiple for Costco? Price to earnings multiple. And I want to hear from you guys. Yeah, Costco definitely trading at a very rich valuation. So I'm actually in Delhi, in India, the capital. So, but yeah, I want to hear from you guys. What multiple do you think is appropriate for Costco? You know, is it 49? That's where it's trading at on a trailing basis. On a forward basis, 46. So Denny says you can't compare Costco to Apple. That's right. But, when you look at price to earnings, that's definitely used as a relative comparable metric that's used for looking at industries specific names. So like Costco will be compared to Walmart, Costco will be compared to like a Kroger or like a Lowe's or anything that's similar to Costco, right, and their business model. But the point simply is that Costco's multiple right now, 49, which is much, much higher. When you look at the sector median, 20, right? That's the median for the sector that it belongs to. Much higher than any of the tech names. Even Google is trading at a lower multiple than Costco. Right? And then we got Facebook, obviously trading at even far lower multiples. So 25, we got 20 to 25, we got 18, we got low 20. So I'm gonna go with 20. I think 20 is fair for Costco. And then we get a $185 fair value for the stock. So I think most of this increase has come from recession fears, and the company obviously benefiting from any type of potential recession that could happen in the US. So since January of this year, I mean, it's up over 28%, it's up over 5.7% on the year. But overall, I mean, it's just been really, really strong. Costco is one of those companies that I want to buy, but it's just, I can't wrap my head around paying this much at $600. Like, I can't. That would be me literally overpaying for that stock personally. And the RSI, MACD also really, really overbought right now. So, Dilip, hey Gadi, when is the get together in Delhi? And whenever you want, I can come meet with you. Would love to get together for everybody who's in India, and yeah. All right, so that's gonna be it. We got about 9 minutes left for the markets to open. I'm gonna open up some individual stock. Actually, that's gonna be over here, I think. Yep. So right now we got Nvidia down close to 4%, down to 222. AMD is now at $99. We got PayPal. Yeah, same for Dollar General. Dollar General has also been going up very, very much. So if you look at DG, this pattern's also like just incredible how much it's gone up since February, right? It's up over 33%. Year to date up over 4%. So some of the discount stores definitely pushing higher. Walmart is another one. So Look at Walmart. I mean, this is just crazy. RSI, MACD really overbought. I think there's a lot of recency bias that's also playing a role with these companies. It's like, they're just gonna keep going up and up and up. Just be careful. But anyway, so we were looking at some individual stocks here. PayPal, slightly down about 1.83%. Apple down about 1%. Square's down over 2%. Amazon is down over 1%. We got Meta Platforms down over 1.3%. And Tesla is down over 4%. Under $990. So breaking below $1,000 right now. So very strong selling pressure coming in for Tesla today. And I'm going to end the poll. And also make sure that you guys drop a like. So make sure that you drop a like. And right now we're at 70 likes. Hopefully we can get to at least 200. Yes, we need Walgreens to get some love. Definitely. Walgreens, I think it's all, a couple downgrades coming in from analysts. Earnings were not that bad, in my opinion. They were good. They were still strong. I mean, mid to low single digits, what we expected. It has recovered a little bit, but it still needs to fill this gap right after the gap down. So $43, $44 still acting as a support here. So Stefan's CPI comes out tomorrow, not Thursday. So it comes out tomorrow. Should be very interesting where inflation numbers sit. Consensus is at 8.5%, with core sitting at 6.6%, I think. Or was it a little bit higher? Might have been a little bit higher. But it does come out tomorrow. All right, let's just get ready for some more pain. By the way, we do have more Fed members talking today. So that's exciting, right? When you've got aggressive stance from monetary policy and the Fed members absolutely ruining the party. Everything was working well up until last Tuesday, wasn't it? If you go back a week, so Monday was supposed to be very green. Last Monday was. And then Tuesday, everything just started going south. Everything. So, yes, so ZIM has definitely dropped quite a bit, more than the dividend amount. It's now trading at $56, down another 2.6%. If you look at the actual dividend yield for this stock, it is now at 67%. Can you imagine? This company, the dividend yield right now is at 67.5%. But that was one of the reasons why I obviously did not execute anything on ZIM, because when we looked at the options chain, it was very clear that the stock has a 100% probability of coming down next week because of that dividend. And of course, how much, when it comes to growth, I've done a video on ZIM, so make sure that you do check out that video as well. But when you look at the revenue growth, revenue basically 10x, right? So we grew 1,000%. Earnings, bottom line, grew by 3x, so 300%. But that's all because of spot rates going up for shipping, freight, logistics, and that's not gonna happen forever. It's not sustainable. It's not gonna happen consistently for a long time, and at some point the growth is gonna decelerate, and that's really one of the reasons why it started dropping pretty heavily. So where is Upstart right now? At $89, down another 2.3%. So $78, that's what we're watching right now. So, all right. Okay, so we got about less than 4 minutes left for the markets to open. We're going to switch over to the actual indices. All right, so it should be interesting whether we have some buyers step in or not. This is going to be the QQQ chart that we've been watching very closely. Again, we're just, selling off here. 340 is going to be that next level of support. 348 is going to be a resistance all the way up to 353. So we got a lot of work to do, especially for the NASDAQ. We were consolidating sideways for a long time, so this was lots of consolidation sideways. We were kind of like back and forth, getting rejected at 356, validating that support at 348, but today we gapped down, and now we're consolidating sideways again. So 348 is now going to be a resistance intraday, and 340 is going to be that next support level to watch. Why are we getting wrecked in pre-market? That's because of potential inflation concerns coming up tomorrow. So I think that's one of the reasons why we are seeing more selling pressure. Just curious, any reason that you started your live stream so early today? Well, wanted to spend some time with you. Wanted to spend some time with all of you guys. And of course, test my new microphone and do some more analysis on individual stocks, go over some intrinsic value calculators, and of course, do some more of the analysis. Are you sure it's not because of my new mic? It might be. It might be. It might be because it's red. So, have you touched NEO yet? Not yet. I want to hear from more. I want to hear more from them. When do they plan on restarting production? Again, very very unfortunate event with the production halls. All Chinese EV makers are down. NEO is down about 9.6%. Li Auto is pulling back over 4.8%, close to 5%, and XPeng also dropping 6.77% right now. All right, so we are into the final minute. For guys, new toys equals more motivation. I agree. I get excited about new tech. I definitely do. I don't think it's just me. I think it's just everyone. When we get new tech, we just get more excited. It's the day for SQQQ, Steve says. Yep, so definitely it's pushing higher. Pre-market, it's up over 3.7%, 3.6%, so definitely pushing higher very nicely. And yeah, as the Nasdaq comes down, the invert ETN is definitely doing much better. Yeah, so I'm definitely going to be waiting till tomorrow to buy more. After tomorrow, to basically buy. Inflation is really what's going to dictate market movement right now. And if it's super hot, over 8.5%, 8.7%, 8.8%, then yeah, things could get very, very choppy. You have to change the mic color to green. I purposefully bought a mic that is only red. It is not green. It doesn't have any green color to this. Because we cherish red days, remember? All right, so the markets are open here. Nasdaq opening down, obviously down about 1.3%. We got the S&P down about 68 basis points and the Dow Jones down about 41 basis points right now. So quite a brutal start to the day, with Nvidia opening down 4%. We got AMD down over 2.8. AMD is at $97. Wow, down over 3%. We've got PayPal down over 1.4%. Apple is down about 79 basis points still. So PayPal 1.3%, and Apple is down about close to 80 basis points. Square down 2%. Amazon 1.4%. And Tesla is going to be all the way here, bottom left. And we're down about 4% at 984. So we'll see if buyers really step in for Tesla or not. Facebook's down about 1.6%. The Dow, I'm assuming, is doing much better. So Dow is only down about 29 basis points. This is going to be all the Dow 30 stocks. Nike is the only one that's down the most, 1.7%, followed by Microsoft, $292, down over 1.5%. Then we got Salesforce, we got ExxonMobil, Visa, Home Depot, Apple, Chevron's also down, and then we got Pfizer, Amgen, Merck, Walgreens is doing better, Walmart, 3M, Coca-Cola, Johnson & Johnson. So some of those dividend names obviously doing much better. But yeah, semiconductor is definitely getting destroyed quite a bit. And this is going to be the entire watch list. So NEO down over 10%. We got Nvidia down over 4.5%. Tesla down over 4%. Fubo is down over 4. Alibaba is down 3.6. Upstart 4%. Coinbase is down 4% to 150s. LABU is down to $15. Enphase, AMD, DraftKings, DocuSign, red. Lots of red. And Vertex, look at that, $282. Might trim some more today as it continues to push higher. Vertex has just been a beast this entire year. You got UVXY, again, that's more on the volatility side, pushing higher. AMT, that's your American Towers. We don't have a lot of stocks that are green in the main watch list. We've got only Vertex that's up. DKS, Dick's Sporting Goods, it's up over 1.5%. And then we got UVXY, which is more like an ETF that you can trade on volatility with. But everything else, not enough stocks that are green, mostly red, and red. So look at the NASDAQ here. Oof, 13,500. This is going to be the QQQ chart. 340. If you don't hold that level, then things could get tricky for the NASDAQ. If the bulls can step up at that level at 340, then I do think that there's still hope for us to continue on this uptrend of this higher highs and higher lows. But 340 is that big pivot that we're watching. If you look at the 4-hour chart, again, nice higher highs and higher lows. I'm going to kind of clean this up a little bit, remove some of the levels. So that's the overall uptrending channel of higher highs and higher lows. 340, very important level. Wow, look at AMD. Absolutely incredible. $97. Low for the day, $96.93. Nvidia, $219. Wow. We got Tesla down about 3.8%, seeing some buyers step in. Meta Platforms is still down over 2%. Apple's kind of holding up right now, and so is Amazon, only down about 1% each. And PayPal also down close to 2%. Qualcomm's down 2%. Let's see how our banks are doing. So it's kind of mixed. So you got Wells Fargo, Deutsche Bank doing much better. They're both up close to 1%. HSBC and UBS, Citigroup, Barclays are all flat. JP Morgan slightly down. MasterCard, Goldman Sachs, Visa slightly down, close to 1% each. Not a whole lot. Cybersecurity, we got mostly red with the exception of Ping Identity. It's up over 5.5%. Wonder why that is. Maybe you got an upgrade? Yeah, why is Ping up this much today? Not sure, but this is the only cybersecurity stock in our watch list that's pushing up, close to 6%. Very nice. CrowdStrike's down. Okta, Zscaler, Fortinet, they're all coming down here. In terms of our EVs, electric vehicles, NIO is kind of leading the way. It's kind of driving us in the sea of red, down about 9.6%, along with XPeng kind of following second. Li Auto, then we got Nikola, Blink, Tesla, GM and Ford doing much better. Ford's up 1%, so not bad. How long do you think AMD will go? This is a big breakdown for AMD, not gonna lie. This is definitely a big pivot for AMD. I mean, this is the level that we've been watching for a really long time. Never really thought that we're gonna see sub 100 for AMD, but here we go. The probability was high. We were knocking on that door. The bears were, and then we finally broke down. I still do believe that the buyers will step in for AMD. But yeah, I'm going to be... So let's just take a look at our cash secured puts here for AMD at these levels and what those premiums look like. So for May 6th, for $95, we're looking at $545. That's very close. You got a delta of 0.41. But you go down one more, $90, you get $355. I think that's very good. I mean, $355 divided by 96.45. We're looking at a return of 3.6% in less than a month, right? Because it's already April 11th. May 6th is going to be 25. Is it going to be 25 days? I don't think it's going to be 25 days. Is it? 1, 2, 3, 3 weeks. Yep, so it is going to be 25 days, but it's going to be 3.5 weeks. So those are some good premiums, I think. An Upstart down to $88. $75 is going to be $4.95. $70 is going to be $3.20. $80 is going to be $6.80. So decent premiums for some of these stocks. Steve, what's a better buy right now, AMD or Nvidia? I personally do think AMD is, just because of the valuation multiples and what we have already talked about. So I do strongly believe that I would prefer AMD over Nvidia as a buying opportunity. Nvidia, as I've already mentioned, sub 200 is where I would be very, very interested in for Nvidia. So between the two, I would pick AMD personally. So yeah, Tesla below $1,000 has been, but look at Tesla's recovery here intraday. It's definitely getting bought up. All right, I want to ask a very important question from you guys. How many of you actually think that we're going to see a breakdown below 340? If you look at the overall pattern, right? So this was the entire lower highs and lower lows. Then we started making some higher highs, and this possibly could be a higher low at 340. But I want to hear from all of you. And again, we've got over 400 people watching. So what do you expect? A breakdown below 340 or a validation at 340? Because that's going to be the most important pivot for the market. Same thing with the SPY, right? 441 is the level, because that's going to be that higher low for the markets. So yep, depends on the CPI data tomorrow. Completely agree. But I still do believe that 340 is going to hold up for QQQ. I mean, if you look at the 4-hour chart, we're definitely, once again come down to more oversold levels. This was an overbought level. We sold off. Now we're again oversold here. And the technicals do suggest a potential reversal from these levels again. Because this was too much selling pressure. We saw that bullish divergence and then a nice rally to validate for that higher high. And now we're just too many gap downs for the markets. So all right, so most definitely QQQ will go below 340, Steve says. Break down to 338, below 340, and get it done with it already. It will break below 340. So okay, lots of people expect a breakdown. Interesting. Yeah, that should be pretty brutal for the markets overall. So yeah, we'll keep a close eye on that. Nasdaq continues to sell off here, down over 1.5%. Yes, I think the Fed members are speaking today. Josh says AMD sucks. Gamers go Nvidia or nothing. I would disagree. I think AMD has been on a very nice growth trajectory. It's seen some very nice revenue growth, earnings growth. The balance sheet's phenomenal. The management is great. And PayPal still down 2.3. AMD 96.70 now. Wow, down over 4%. But Nvidia is here under 220. Meta Platforms. So let's take a look at some of the energy companies. So Chevron, Exxon slightly down about 1.82%. So yes, we talked about the shops stock split 10 for 1. How is Shopify doing right now? Let's take a look. So down about 90 basis points. So Lokesh has Vertex added by Motley Fool's lifetime buy list. It's interesting because, again, just a few months ago, everybody was downgrading that stock because it was like too niche, and they only had one business to depend on, cystic fibrosis. And now that they've gone up 60%, you're seeing a complete sentiment shift on that stock, right? Everybody's like super bullish on Vertex. It's like the next big thing. But Shopify 510 is going to be that next support right now, and sub 500. I could see myself starting a very small position for Shopify also. So ZIM, we've already talked about. I've done videos on that as well. Obviously dividend yield was, in my opinion, a big trap because looking at the options chain, we almost certainly knew 100% that the stock was going to go down. And it has since dropped, I think over 20% or 30%. So from highs of $90, it has fallen over 40%. Okay, so that's been quite a bit. It's because of the dividend capture strategy. A lot of people buy this stock to just get the dividend and then it sells off. And then on top of that, the growth, as I mentioned, is not something that the company can replicate every single year. So you have to really, look at that COVID, the pandemic, as an anomaly. And that's one of the reasons why the spot rates went through the roof. The freight logistics went through the roof and the company had such high revenues and earnings. But is that something the company can do year after year after year? And the answer, in my opinion, is no. So that's why we do have the valuation where it is, trading at 1.54, 1.21, because expectations of earnings are that they're going to come down, right? So that is the potential expectation here. Do you think LEB will go below 1350? It is very possible. I mean, it's a leveraged product, so it is going to be more volatile than others. If you take a look at XBI, this is the one that I would track. This is the one that I would really follow up with if you're looking at LEBU, because again, LEBU, what does it do? It tracks this particular ETF. So resistance $96, $97. This right here is going to stay put as a resistance, and support right now on the weekly chart. We're still watching this higher low, or this ascending support for Biotech here for XBI. I might be a little bit too early on Biotech. I think I'm fully aware that this is not an environment with interest rate hikes that Biotech is going to really flourish. But at the same time, it gives me the opportunity to kind of build out the positions, dollar cost average. And like I said, I might be a little bit earlier on the Biotech play, but long term, I do believe that there's significant opportunity on this particular sector. So I'm going to continue to kind of position myself well for this sector. We do have some buyers stepping in. Not a bad sign here with the QQQ pushing right back up to 344, 345. Still down over 1%. So that's something to keep in mind. InMode, let's take a look. How is InMode doing? Down 4%. Wow, $33. This stock is just absolutely getting destroyed. So $30 is going to be that next support level to watch right here. Wonder how good the premiums are on this one. So May 20th, we're looking at 170 for $30. $30, that's going to be that support. If you do the math, 170 divided by 2830, looking at a 6% return, but that's also till May 20th. So a little bit over a month. 6%, that's 40 days. Not bad. Not bad. And your average cost will be a little bit under $30. But yeah, I already have a couple of cash to go puts. Otherwise, I would have definitely looked at that one. But yeah, Nvidia getting a little bit bought up here. AMD, we have the buyers kind of stepping in. PayPal, we have the buyers stepping in. Meta Platforms, still down about 1.6%. Tesla down close to 3%, so almost getting up to $1,000 again. And Amazon and Apple also getting bought up, with Square getting bought up also. So we do have some buyers stepping in, definitely, but remember, it doesn't matter where we trade in the morning or intraday, it all depends on where we close. Where we close matters most. Last 30 minutes, the power hour, is what matters, is what makes the market, really. We've got exactly 420 people watching right now. I can see it, 420. Oh, we just went up to 422, but pretty interesting. We've got 420 coming up also. You can definitely expect Elon Musk to make some type of Twitter joke about it. And it'd be nice if some of the cannabis stocks pushed higher. Let's take a look at True Leaf. So TCNNF is, last time I checked, just under 20 bucks. So yeah, right now is 1980. So flat on the day so far. Let's take a look at AT&T. What happened here? What? $19 AT&T? Is this because of some type of restructuring, or let me see. Oof. Tumbled 23% after the company closed the business combination of its Warner Media business with Discovery. Okay. Yep, so I think it's getting priced in. I think there's going to be a new stock with Warner Media. I'm not sure what the ticker was for that. I think there's going to be another stock that's going to be trading for Warner Media business. Not sure. WBD, okay. Yeah, Discovery Series A. Yep, so that's the one. Gotcha. That makes sense. Yeah. But yeah, AT&T, wow. The dividend yield now at 4.6%. Could be worth a look. Definitely for the dividend portfolio. Could be. But yeah, I mean, if you are an AT&T shareholder, obviously this thing is down 20% or something, but you might have received the WBD shares, right? Because of the merger. So you might have received that $25. Some shares, if I'm not mistaken. I think that's how it's supposed to be structured for AT&T. So Nasdaq is getting some buyer step in right now. We're still down close to 1%. S&P is down about 75 basis points. Dow is doing a lot better, down about 30 basis points. And the volatility, let's take a look. So Ed says, yes, I got 16 shares. Okay, good. Yeah, that's what we were expecting from AT&T. So VIX is up over 8.5%. Anyway, you guys, thank you so much for joining in. That's going to be it. A little bit of a longer live stream to go over some intrinsic value calculators, some fair values for different stocks, and of course, testing out the new microphone as well. The markets are red, but as we here at Money Vesting, we definitely cherish red days, and we like to take advantage of them. I will continue to kind of dollar cost average on some of the names that I feel are trading at very low valuations. Here's a fun fact. PayPal, Google, Amazon, and Facebook. All four stocks are trading at their lowest valuations ever in over 20 years. Cheapest valuation ever since they've been a public company. I think we've discussed that before, but if you think about it logically, that's just ridiculous if you think about it. So once again, thank you so much for joining. I really appreciate it. And hopefully this stream was nice and crisp with the audio and the video. So make sure that you drop a like if you enjoyed this live stream. Also check out the Patreon link down in the description below if you want to join. And of course, be a part of our Discord community. We've got 5 spots left. So that'll give you access to all the private videos, tutorials on fundamental technical analysis, the buy and sell alerts, the options alerts, the portfolio updates, and all the other features included as well. So thanks so much for joining. Hope you guys have a great green day, and hopefully the markets recover despite the color of my mic. But as always, take care, happy investing, and I will see you guys in the next live stream. Cheers.